price cut on commercial vehicles. But talking about the liquidity squeeze, it looks like the Insurance Regulatory Development Authority of India does not want any sort of a relief going in for corporates by allowing insurance firms like LIC to go and access some more of their debentures in terms of providing them funding. This could mean a big squeeze to corporates, but at the same time, for IRDA, it says it is a good prudent action not to exceed the limit of more than 10%.
It was meant to open the floodgates of cheap credit for India Inc. The who's who of India Inc., from Reliance to Tata Steel, Larsen and Tourbo and Mahindra, were all relying on LIC to raise rupee debt via non-convertible debentures, as most institutions have stopped lending. But now, LIC too will have to be prudent. The insurance regulator has told NDTV he is not in favor of relaxing the rules and allowing LIC to invest more aggressively in corporate debt. Currently, LIC can invest up to 10% of capital employed by the investing company or 10% of the fund size in a corporate entity, whichever is lower. Capital employed includes share capital, free reserves and debentures or bonds. There has been hectic lobbying to hike that ceiling to 20%.
Is there going to be any relaxation on that front? Because, sir,
You see, these guidelines are a measure of prudence. And therefore, if you're saying is there going to be a relaxation of prudence, I don't think so. I don't think it's wise to be less prudent when they're getting into a more difficult world.
Until last year, the rules were a lot relaxed and LIC's ceiling was up to 20% of the capital employed. But this was halved just 2 months ago. LIC has been aggressively putting money into secured debt of blue-chip companies to earn better returns, roundabout in the range of 11.5% compared to lower returns on G-Secs. These 10 to 12-year instruments can also be traded. IRDA chairman has now told NDTV that a higher limit may be considered only for certain special cases. The insurance regulator's tough stance on prudential norms for insurers at this point in time might not go down well with corporate India as well as the finance ministry. In fact, so far the government has not intervened on this issue, thinking that it will be mutually settled between the regulator and insurers, particularly LIC. Plus now, in the absence of a full-time finance minister, it looks likely that insurers will have to live with the insurance regulator's diktat. In New Delhi, Sapna Das for NDTV.